All right, let's have a little quick recap. Friday closed, the markets closed at the high of day, although they were, I would say, unchanged across the board. The S&P and the Nasdaq were down, whereas the Dow Jones and the Russell were up. But I would just call it a sort of sideways day. Now, although they closed at a high of day, like I said, the SPY and the Nasdaq were red, so neither bearish nor bullish. They did try and do a bit of a double bottom. So the S&P, you can see here, trying to do a bit of a double bottom with it's the last time it went this low on that Friday on the 10th. Didn't close that gap though, but that's close enough. So unlike the day before, it would close at low of day, it was actually a high of day. It really is a whipsaw sort of market, especially at the top over here. And I do consider this a top. Nasdaq, you can also see a bit of a double bottom attempt here at this support zone. Prior resistance acting as support perfectly here. So a bit of a hammer close, but again, it was a red day, so not bullish, not bearish. Dow Jones, similar, it did venture, I think at one point, let me just delete this, it did make a new low here of this sort of period, so it did venture below the support zone, but closed substantially above it, so still not technically bearish, plus it was a green day. Very, very narrow little channel here. And then the Russell, probably the most bullish of the four, that also closed green, didn't make a sort of double bottom attempt. It closed, it actually didn't venture that much lower than the prior day. So I think this is the most bullish of the four. But still, I think they are all going sideways. I think they're going to try and mount a small rally, and I think they're going to fail. They're not going to get all the way up here, and then they're going to go lower, and then they're going to flush to sort of new lows, or at least below the level that it's been holding around here. So it's probably clear on the Nasdaq. So here, for example, maybe try a new rise, then fail, then go lower. And then we'll see what happens here. There's going to be macro data. There's going to be some earnings. Actually, speaking of earnings, I think Wednesday there's the NVIDIA earnings. That's the last, the big boys. That'll be important. I mean, if that's a bullish, if the market interprets the earnings as bullish, then you may even get as high as here on the Nasdaq. But still, I just feel like, and I've been saying this for a long time, but it's so hard to justify moves higher than this. So I do feel like we're going to have a bit of a move up and then a move down. So on the S&P, something like that. Then, for example, then it'll depend. Certain indices will start to have their own technical indicators kick in. So for example, the S&P may find a bit of support if it goes down here because this is ascending, and then lose it and go lower, and that will start to flush the rest of the markets lower. And then the Nasdaq's lost its horizontal, that starts to flush. The Dow, for example, if it loses this, if it closes below it, which can happen in one day, 1-2 days, Wednesday evening, Thursday morning, it's here, and then straight away, if you're opening below this level, back down here. And then, some of the indices look very, very bearish, and therefore the rest of them will have to go bearish. So there'll be a bit of push and pull, but overall, my thesis is sort of sideways up, but down, medium term down, ultra short term up, medium term down. And by medium term, I mean several trading days. So that's my take on the markets. And likewise, the VIX, a small move lower, but ultimately, we're going to go back, test this mini resistance zone, but ultimately test the sort of mid-range of the 20s. And I really do see us eventually going all the way up here. So I may even just paste this here. You see? So let's see what happens. That's my take on the markets. Let's look at yields. Yields topped out a little bit. So yes, the 1 year was green, but look where we are. We're basically venturing at new highs. And when I say new highs, I mean highs during the bear market. If I go back to the weekly, okay, maybe not on the 1 year, but the 2 year, you can see we're nowhere near new highs, obviously going back several decades. But I still think, looking at the 2 year, look at that, it tagged this zone here, the sort of 4.7 resistance. That's several times we've tagged it and closed substantially below. But I don't think it's the 2 year so much. I think it's more the 5 and the 10 year. I'll show you that in a second. But I just feel like we're going a bit sideways down because we made a hell of a move here in not that much of a period. This is like 2 weeks of trading, 2-3 weeks, especially since this very engulfing day here on Friday the 3rd. But, I was saying it for a while. I mean, watch out for the descending line. Then when we closed above it, I mean, look at these 2 days. That marked a massive reversal. And it's only now that you hear the mainstream, like CNBC, I heard the other day, starting to say, oh, the yields are going up. Well, yeah, they're going up. They've already made a hell of a move. Now they're actually going to go down because you started to say they're going up. So I do expect a bit of sideways. For example, the 2-year could come back, kiss this little area, prior resistance, go back up, sideways up, something like that. The 5-year, you can see, yeah, I leave this one in place. I mean, it broke above, now sideways because of the 2 years effect, maybe break back up, go higher. The 10-year, look at that. It touched its horizontal. Obviously, the further out you go in the yield, the lower they are relative to the others. But this one also, maybe a bit more of a drop. Cup and handle, right? Here's the cup, here's the handle, and then boom, higher we go. The 30-year, exactly the same thing, just 1 or 2 days behind in terms of price action on the upside. But yeah, that's what I expect to happen. And actually, European yields also, look at this. This definitely hit its resistance. I mean, look at this. This is beautiful bullish pattern. Even going down here is still very bullish. I mean, nice reversal. You just want that little handle and then maybe another one and then boom. So even the British yields started to make a bit of a move up. And I think that, if you start to see British yields making new highs, I mean, moves towards new highs, that would be scary because they're the ones that came down the most. But look at this. They all hit their own sort of resistance point. So it really does make sense. You had this sort of global resistance, horizontal resistance on yields, and therefore they went down a bit. And maybe that's also why the dollar, well, we're going to go to the dollar now, actually, might as well, because the dollar follows, right? Exactly the same sort of candle. In the middle of nowhere, there's no resistance here. It's just, yields started to find resistance. So the dollar probably did too. And it's also broken out of its descending. It's a bit behind yields. So, it hasn't hit its horizontal yet. So it's actually behind the 30-year yield, you could say, if I just bring up the 30-year. The 30-year is a little higher, already hit its horizontal, but the dollar's a bit behind. But still, I expect the same thing, a small move down and maybe touch this descending. Because like I've said quite a few times now, when you break out of the descending, which to me is a bullish flag, it's the most bullish pattern you can play. If you're overall in an uptrend and you come down a lot and you start to take out a descending, that is the best risk reward pattern to play. You buy it because the overall trend is up still, whether you believe it should be or not. Fundamentally, it is for now. And you break out of it, there'll be a little sideways move. And as soon as it's stopped, when it starts to curl out of this sideways move, you buy that and you can expect more of a move higher. So I think this is still bullish. Let's see, anything can happen, but I like to actually come up with a sort of more concrete decision. Like, I think the dollar's going up. I hear so many podcasts, people saying this could happen, but this could happen. And, they cover themselves from all angles. I really don't like that. I think the dollar is just going to go sideways down and then back up, just like yields. And I think they're following the yields. They're both sort of marching in lockstep, the dollar and the yield. So I'm not going to check the currencies because it'll be the same sort of thing. So if the dollar's going to go sideways down, maybe this will go sideways up. This will find resistance. The euro makes a large part of the DXY basket, just like the Japanese yen. So if the dollar's going to go down, you can expect maybe move back down to this horizontal ascending support, and then another move back up. And the pound. So it's really the euro, the pound, and the yen that make up the majority of the DXY. So here the pound will go up against the dollar. I don't know if it'll hit this resistance and come back down or whether it'll hit the higher one, but I still think that will happen. Might as well add this. I get attracted to trend lines like a little moth to a flame. But yeah, that's what I expect to happen to the dollar. Sideways down and up, just like yields. Let's look at commodities. Starting with copper. Nice little hammer, although it was a red day. So this bullish engulfing, it should really go up a little bit, just like the markets. And usually copper follows the markets. So, and just like the markets, I think it'll come back down, as I feel with commodities in general, like gold and silver, which I'll get to later. So I think something like this, bit of a move higher and then back down, test descending support, and then maybe bounce 1 or 2 days off this and then go back down to new lows. By new lows, I mean below this level here. and then maybe even lower, because you will have lost sufficient support to dictate a further move lower. So at that point, you'll probably have to start drawing this trend line out a bit further. But we're getting ahead of ourselves, and that may actually coincide with this trend line here. Whatever, we'll see. But something like this, a move higher, but an inability to make new highs, for this period here. So just like the markets, it'll go higher, but not take out its more recent highs and then sort of drift lower. Natural gas, absolutely unbelievable, but I've seen it before. So just when you think it's going to break out, when I thought it was going to break out finally, and I've got it wrong for a few periods. I thought $4 was pretty good. I thought 3.5 was pretty good because I really thought it was going to break out. Then when I started to see that, no, it's not breaking out, I thought, right, wait till 2.5. And I'm not in this trade. I'm not paper trading it. I'm not in natural gas at all, except this one stock, Trillium, which is not really following the gas price too much, although recently it has a bit. So without skin in the game, I got to mention that early. And okay, we broke out of this, but now we made new lows, although we did touch this prior resistance, the descending line. So sometimes you could call this a bit of a technical zone to buy. But if you just zoom out, so I think sometimes you need to have a bit of context. You zoom out, you see, okay, we've been lower, first of all. And you know what? Let's go to the weekly. Look at this. I drew this trend line, just to give some context. $2 is pretty much multi-decade low. Yes, it's been at $1. It's been a bit higher. But you just fire and forget at that point. You buy at $2 or two. I mean, the next buy, if I was in this, honestly, if I was in this, and this isn't some pump and dump penny stock Chinese scam. This is gas, the commodity, which is not disappearing. The next buy I would put in place would be just above two, like 201, 211. I don't know. I'd buy just above two. And then, yes, if it goes lower than that, because things can always get oversold, have really oversold indicators, RSI is going, way below 30. You could get this just 150 or 161. Just make sure you're in. You don't miss it by 1 cent. But I would just zoom out and just have some context. It depends on your time horizon, your age, your risk reward sort of ratio, how aggressive you are, and what you're trading. Are you trading an ETF, the commodity itself, some sort of stock related to it? So it all depends what you're trading. But if you're in this trade, just zoom out and just remember that long term, you're hitting a bit of a bottom here. And if you can wait at least 1 year, you should really be rewarded. So, and you know what? Looking at oil now, this is a great example. Look at what happened during the COVID days. Just, on the COVID crash, you had oil, basically at $10, which is obscene stuff. And at some point, I think some of the futures, some of the contracts were negative or almost negative. I remember there were some people paying people to store their oil. So instead of getting rewarded for producing oil, you would have to pay someone the pleasure to store it. It just doesn't make sense. And then look what happened, 1-2 years later, from basically $10, you're up, basically 10 times, 1,000%. And this is oil, this is the kind of reward you get in some altcoin in the crypto market. This is absolutely ridiculous. So remember, when you're looking at gas down here, some context. Just to get back to oil, right in the middle of the range, not a buy, not a sell. You've got some games going on. You've got the SPR, you've got the war in the background, and the Russians are really making advances here. The counteroffensive. It's funny watching the mainstream media just finally changing their narrative. Ooh, Ukraine may not win, but Russia won't either. I really think Russia will win this war because they have decisive objectives. They don't change their policy, right? War is a continuation of policy by other means. You don't change your policy halfway through. Look what happened to the West and Afghanistan, and basically in every war they've waged since World War II. You don't have a clear policy. You basically lose your wars. You're involved in guerrilla wars. This here is a regular war. Regular formations. It's not even guerrilla warfare. That's what a inferior army fights when they're unable to create regular formations to fight in open pitch battles. But for me, the Russians have a clear policy. It's to destroy the Ukrainian military. They have the industry, the morale, and by morale, I mean the people back home supporting it, as well as morale within the troops. Weather is on their side, I would say. Logistics, familiarity with the terrain, supply lines very close to the home. It's not like us who fights in the Middle East. I mean, you have all the main principles of war, basically, for me, indicating Russia's going to win. So it's just, when you go to the mainstream media and you read 99% of it is just it's just trash. It's a shame. But anyway, the war also affects oil, and just remember that the Russians are pretty much going to win. And by win I mean destroy the Ukrainian military to the point where they are forced into negotiations. Maybe the US will force them to go to the table, but that's ultimately what draws a close to a war, is when you have negotiations. So how will that play into the oil price? Maybe the oil price will go up, actually, as news of Russia's inevitable victory starts to filter in. And you've got the SPR release, and you've got supply demand of oil. So watch out. I do think that you could buy oil a little lower. So, and if we come here, we have a triple bottom. We could flush, go to this level here, at which point you're in the low 70s, and maybe get some stop losses triggered to the mid 60s. I don't know, but this entire zone here is a buy. I'll leave this big fat target so that I cover both. And let's see. So that's oil. Let's look at gold and silver. So gold and silver put in a nice sort of reversal candle, unfortunately. Now, I bought on Thursday, so I've bought the 1830 zone. So I don't need to worry about, gold was at 1818. It's the same thing for me. I'm not buying until 1800. And by 1800, I mean 18 sort of 01, 02. Will we get there? Not immediately, because I think we have a bounce coming in commodities, right? That's what I said for copper, because I think we have a short-term drop in the dollar and yields. So, markets and commodities short-term move up, and then the inverse for yields and the dollar short-term move down. So therefore, gold could go up a little bit and then come back down. Let's see, maybe we'll go lower, just like silver, right? Silver has an even stronger reversal, but that's come down a bit more as usual. It goes up more and goes down more. And let's see, I need to see where it finds resistance, because, is it 22? Can it go higher? Can silver go higher and then find resistance? Just like gold, can gold maybe test its 1880 zone? Prior support here becomes resistance. I don't know. And then likewise with the miners, just the same sort of candle, very, very perfect sort of hammer reversal, despite it being a red day. You can see how much of a reversal is, and you can see the trend lines. They're hitting the trend lines pretty much. So it makes sense if we have a move back up. Does it hit the ascending support? Does that become resistance? Or maybe does it go higher and hit the horizontal and then come back down? Either way, I'm going to be selling this. I'm going to be selling it because I think it's going back down, and also because I've bought this zone. I bought the 1830 drop around here. I bought individual miners, so the charts will look a little different, but generally speaking, they all follow the same trajectory. So I bought this zone. Do we go up here and hit the ascending, or do we go even higher and then drop, or do we just do a small move up and then drop? Either way, if it's a very small move, I'm not going to be selling. So I need at least 5%. That's my kind of rule, about 5%. Otherwise, it's not really worth it. So you can see how we could go a bit higher than 5%. And if it's sort of 4%, then I'll take that. If I'm sure that we're going to go lower, every percent is worth it, I guess, at the end of the day. So that's my take on the miners. I will end it there, because I do intend to make smaller videos, one covering the crypto market, because Bitcoin is outperforming the others. And I just want to cover some other coins, Ethereum and some other ones, comparing it to the Nasdaq. And I just think they deserve their own separate video. And then I want to do some large caps like Tesla. All right, I promised to cover Tesla, and I want to cover Google, Intel, some other of these big stocks. Some of them outperforming, like Tesla. Some of them underperforming, like Google. And I just want to cover some of those, and maybe I'll do my portfolio. But I'll leave it there. Thank you. Sorry for the rant on the war. I did do several masters and a PhD in military strategy, so sometimes I want to just convey my thoughts. Otherwise, enjoy your weekend and enjoy any other video that I might do.